Okay, everybody, it's a Tuesday and a lot to get to right off the bat. Big shout out to the chat. What's going on? How's everyone doing today? Back on a Tuesday. We're here Monday, Tuesday, and Thursdays. Thursday, we give away those books. First person to show up on Thursday and type V3, you'll win. And we're usually going to do that just to kind of get the first people in. If you did win a book, please let other people win. Appreciate that. So let's get to it. What's going on? Markets, yeah, they were down earlier. They're trying to come back. S&P is flat after being down 30. NASDAQ was down 200 and change. And this is what happens when you violate massive critical pivot points, inflection points, weekly support. Look, it's going to take time, but it's already been triggered. You're getting the 886 set up here with a whole bunch of things for major markets to do the swoosh. And I think you've got enough announcements between Fed announcement coming up tomorrow, earnings starting really next week. A lot of ammo for this thing just to finish the final leg. Yep, absolutely. We'll look at XRP. We'll get into some of the crypto. I mean, Bitcoin's amazing, holding at 19,000. That's, it's like a, I don't know, sleight of hand trick. The fact that that thing cannot go under 19,000, fairly remarkable. But for NASDAQ, listen, we're now at the larger 1618, not only off of this year's low, but, you go back to 2021. That's now what we're dealing with at 93.98. We broke the BAM, and we've talked about that a couple weeks ago. A little bit of a pause before we head lower, but, it is continuing. And again, the key, it's difficult to see, but, whatever your primary trend, if we're in a downtrend, the critical factor, okay, is to see lower highs. Okay, that's the real progress. You can keep poking and make lower lows, but what you really want to see is a lack of conviction for the buying to kind of sprout up again. And that's where you are. You're in a final leg. I mean, no doubt you're in a final leg. You're in a CD leg of the crab pattern down to 9,400 now. That takes you well under the 10,000 level. This is NASDAQ 100, NASDAQ Composite, pretty much the same deal. Absolutely. Big shout out. Hey, what's going on, Cody, David, Costa, AA, Ron, Lalo, It Flies, It Dies, Swooping Hawk, Stephanie, Laser D. Everybody, get with Miss Stephanie. If you have questions and you don't find me as responsive as I really should be, which is, I apologize. I'm trying to get back to all the emails. I try to personally respond to all emails within 24 hours or so. Sometimes that doesn't happen. But please go to harmonictrader.com. This is the best place to get all answers and become a basic member. I know I've had every stream, it seems like we pick up a handful of newbies. And so I want a special shout out to the new people. Don't be afraid to ask questions and go to the basic members page, please. It all begins there on Harmonic Trader. And then to get help, because there's a lot of people who are asking specific questions, go to the Discord. And we have moderators in there. A big shout out to those guys. I appreciate all of you. Go to the Discord, hit that link, and then just join in and connect with the people in there. That's a special shout out to the newbies, especially the ones that have contacted me and said, hey, I'm new to this. I really get it. I just need experience. Where do I go? That's the place. And then, of course, get with the software. Get with HPC for TradingView, and it's available 14-day free trial, HPC at sr-analyst.com. So welcome to, I wanted to give those guys a shout out yesterday, but it's great to see new people coming into the community all the time and learning about the framework and what it is that really comprises actionable opportunities. Right now, we're looking at a lot of these bullish patterns as a framework to understand where this entire momentum, where this downtrend is headed towards. in the short term. I mean, I'm not saying even long term where we have lower targets, but where is this thing going? Zero buy, and absolutely doing this consistent pattern, a serial breakdown, a week over week, a day over day decline here that does not suggest any opportunity. So take it like this, if we're this is the part of the patient, being patient with the process, where if we're lining up potential opportunities for us now, they're not until down here. So if anyone's saying, hey, I've got a long opportunity for you, I would say run, because we're in a final CD leg, and like a magnet, we'll come down to that 9,400. That's that 1618. Probably, I would say, in the next 2 weeks, certainly by the end of the month, if we're going to make a run for this. Now it's October, probably leading right up to the midterm election here in the United States. A couple of specific stocks that I'm going to run through every day for about 30 seconds, because you need to do the same. Microsoft will tell you everything about this market that's going to happen. Almost hit the daily target. So remember, weekly target has a bat pattern, retesting its 886 from last year, 213. Here's the daily, which we know is a crab, and it's got a few things, but it's really this crab where our objective and what we have been really lining up has been this kind of zone, 241 to 221. And there's the zone. Tell me what it's doing in that zone. Your confirmation triggered a little pause, but there was an absolute breakdown, rollover, failure, a real nasty gap down, an island gap even, you could call that, on a 3-day. And so 221, you're down here at 227. Why not? I'm no rush on any of these, but I'm certainly looking. I'm looking for some kind of development. If nothing and we fail, and let's say we go, Microsoft starts trading 218, 209, 207, you get out of the way. This is where the larger breakdown and kind of the wildfire of the bear market spreads to the big boys. And that's all that's left, because your smaller Cathy Wood, Ark, innovation markets are crushed 90% in a lot of cases. So it just, where we are in the process and in the framework relative to all the craziness going on is we're waiting for this return phase to finish, which we've been talking about since September. Come back down for the type 2 on that, and then take a hard look. This is no different than, say, Tesla, which continues to trend lower to the 208 target we have been mentioning for a long time. This bat pattern has dominated the last 4 months, not only with the type 1 reaction from 208, and that was pre-split, by the way, but then this return phase, which is what it's still doing. And we got within how many bucks? We were 218 this morning, $10 away from that 208 target on Tesla. And that's the first. That's just the kind of the minimum objective. Now that we're here on the return, be mindful of that. If we get a big sell-off that goes underneath your 886 level and even somehow flirts with the hop down at 150, don't be surprised. And it could be some big candles. It could be a big weekly down candle, 2 weeks, 3 weeks. Let's go to the daily. Continuing. Yeah, here's the thing, the daily. Okay, we've had a number of back-to-back patterns on Tesla. You're hitting a deep crab pattern right now after bearish to bullish. Okay, but no confirmation. This is where HSI is not in the right place, because look, there's your completion for the pattern. So you start looking to the right of that. Do we have a bullish HSI oversold? No. Look at your amplified RSI. Where's that? That's in the oversold extreme, still spending time down there. Until that popped out, you're avoiding it. And the same goes for relative strength, which is um, fairly, no, I wouldn't say unusual, but rare. You don't get too many clear daily RSI oversold, overbought. Your last overbought was August, and it's been a fairly linear movement going from overbought to oversold the last several times. I will be monitoring this. We could get the washout down to that 208, 213 level, somewhere down here, and then turn, but it's not there yet. So we're like we've been for the whole time on this type 2 return phase for all of these. Okay, they're making their way down lower, taking their time. I'm not taking my eye on it. It's like an everyday thing, everyday occurrence. We want to be looking at this. Here's the other thing. We were jumping around quite a bit yesterday, and I started with the T-bond chart, the 10-year, the T-bills 2-year. And again, we're just looking at, there we go, weekly against this bat pattern. It's a hop level, everything going on here. Can we get above these prior peaks? That's if we start to hit resistance, if this comes off a little bit, you'll see the market at least give you some kind of reaction rally. But you need another day. You need 2 days. Stalling. Definitely on the daily time frame, not able to get through in a blast off move up here, 4% on the 10-year yield, big ceiling for now, and that's okay. Here's the other thing. I think I mentioned this last week. You do have amplified RSI putting in some kind of divergence move, but it just popped out of the zone today. So give it time, folks. I mean, give this a little time. That's the one market that needs to turn around before you could expect anything, any kind of respite in the selling of this, just the deflation really of asset prices. But you're getting close. Here's a couple of things that a couple more ideas. Okay, let's take a look at Uber. That's one that has bounced around. We've gone from bullish to bearish, and then maybe get ready to go back to bullish again, but lower. So Uber up around that 33, 32 handle gave you pretty nice action off of the shark. 21.38, that's our target all the way down here, because there's a couple other. 21.56 is an ABCD. $21 retest would be a great place to look for a secondary entry long, still about 4 lower than from where we are. So keep an eye on that kind of check back retest situation. It's a lot like Microsoft. Of all of those innovative markets, at least that one has some kind of stability to it. A lot of the other ones, let's look at go back to the Cathie Woods Ark Invest, because we started getting this as we finished up yesterday. There's a shark pattern down here, and it's tracing out a few things, but generally with the pattern and these prior lows, and you have a third test now of this 35 level, that has to hold. I got to think that if Ark is a failure, and Ark definitely this innovation ETF breaks down here, take a look also at the big bat pattern. The problem is this then becomes a really sloppy weekly structure that, like a lot of them, until that downtrend is taken out, you're going to target hop levels at 1442. Nothing else left here. And again, this is starting to get to a point, depending on what your market or your ETF or whatever it was, you're starting just to get back to this whole complete destruction of the tech cycle, whatever it was, last 5 years, last 10 years, however you want to look at that. But again, even 886 all time is still $30. You haven't hit that yet. Nothing, nothing here on the Ark ETF says that I want to consider it. Look at HSI. Your last bearish, now coming back down into the zone. Probably got to wait until that triggers for bullish, and same with AMP RSI. These indicators are not quite there yet. Look, we're in a tough spot. Markets just continue to sell off day in and day out, and those that are probably decent or a little stronger are barely holding water. And this will create opportunities, but they're going to get absolutely pummeled. And from a pattern perspective, we see these hop levels get tested time and time again. And with the price action we've seen on a massive bat pattern, I mean, here is where we completed the pattern way back in May. It's a weekly chart. Come on back. Where'd you go? Where'd it go? There it is. So here's terminal bar. Okay, you're week 30, week 28, 27, 28. Nothing. The equity curve or the reaction curve is probably a better way to say it. Over those 30 days looks like this. A little reaction and then down and below your starting point within that 30-day window. That's not what you want to see. I mean, really what you want to see is something like, all right, come back, have a little retracement, but some kind of positive momentum that's not happening. This is just straight rejection, back down, retest of the lows, and vulnerable to the hop. Vulnerable to the hop. Couple more. I mean, your favorites. This is why stuff like Adobe, so critical. Apple, critical. Sorry, not Adobe. Tesla, if that holds. Microsoft, if that holds. Because your high flyers like Adobe and others that were those second tier tech stocks are now in the process of just a second leg down that started the end of last year. And really your first leg was this into June and very little recovery. So you have to keep going out your time frames to get perspective of what is possible here, and just go back to where the larger run started. I mean, even off, go back to 10-year mark, you're at the 618 level. The decade low 886 gets you to 104. Okay, you're 287 currently. Nothing that has really developed here. And look at Adobe is already back almost below those COVID lows. So what is the second phase here? What's the next leg, if you will? If there's nothing that comes in, and I mean like today, tomorrow, we come back Thursday, we're still skidding, then you're opening up for this next leg lower on things that that was supposed to be safe. Adobe or Cisco. These were supposed to be safe. But look at them. Here's Cisco on a monthly. Look at that amazing alternate bat pattern. Back-to-back bat patterns, by the way. 2003 was the low. Incredible. But you're on a type 1 reaction. Here's another one. Dell. Not quite what it was 20 years ago, but go to the weekly chart. There you go. Flashing some patterns, but still a bit lower, 10% lower on the patterns that are generated now, currently. What was the other one? Intel. Intel is in trouble. Intel is in trouble. We talked about Intel a long time ago, and I was thinking maybe somewhere around $35 or $30 we would find support. Nothing. I'm really surprised to see this thing trading at 25. And I did believe we would see some kind of support come into 35. But this is another one where at those critical spots where you're supposed to see some action, it's a complete washout. And so we have to go back to the longer retracements. We've been here before. I mean, the Intel cycle of the 90s, it's starting to develop a similar pattern where you had a massive run from the 90s all the way up in the 2000 and then come back and pull back. Well, that was almost 88%. That was like 84%. So, we're not fudging things here. We can just go off the clear decade cycle lows to highs here. This one's a little bit longer, but again, 85, 86%, you're talking $14. That's what it's acting like here. And this washout that is just not even respected anything. Nvidia is another one where these are going to get, you're going to really just take it on the chin where the cycle's over. You've created what I think is a vacuum, quite frankly. I think you've created a vacuum of buyers where they're just gone. There's zero. It's all, you've got what you have now are just people that are over leveraged, hedge funds, mutual funds that are going to probably throw away these positions. And this is no doubt a massive correction on Nvidia. But let's just do the cycle retracement off the COVID low, $60. There's nothing here. That's what we've come down this far. When you get down this far, you have to kind of start to assess this on a larger scale of what is happening relative to, say, 2008, 2002, 1974. We're there. The NASDAQ is there threatening to join those percentage losers. Those were 30 to 39% losses on the day. So, on the year, NASDAQ's 25, getting to there to 30, could be 30 plus, where we're due more damage this year than even 2008. That would be remarkable. Here's something that's rolling over. Another one where Netflix looks like all the devastation's done, right? On that monthly chart. It's an amazing, absolute crash correction. But the daily hadn't posted another. This is a crab pattern up here, rolling over now. Today, you're down 10 today. Just a little time before this thing really starts to get going. And what we're talking about here is, on a measured basis, maybe as low as 193, but this could be the pattern that sets off the next leg down to new lows or to retest lows. 160, 165. The other side of this is that I wouldn't even want to assess or consider this a bullish opportunity until we had some kind of bullish pattern. We've seen a lot of back-to-back structures. And the back-to-back structures tell us that, all right, if you're bearish now, we'll get another opportunity, but only if we get a bullish pattern. There's NQ, basically flat. There's NQ on the TradingView platform. Couple of numbers right at 11,000. It's really trying to hold. I don't, I would expect a big bar down. Maybe after tomorrow, there's some kind of announcement, and you get one bar, and you're literally like one big bar away. I said that the other day. A down 1,000 day on the industrials, or down another 300 or 400 down day for NASDAQ should pretty much seal the deal for this thing to be a total flush. Been really challenging. I mean, look at what Nike's doing after the massive drop. Let's go to the weekly. We had some patterns on there. But now, nothing. Shark, Nike Shark at around 65. It's the COVID 886. And again, if you're wondering where your markets are going, first take a look relative to the COVID low? How far have we come down, and are they close to an 886? Do they have some kind of pattern off of here? Because that's ending up to be the likely target for most of your major markets like this that are already down 50%. You have no clue where it could go. Start connecting dots. I mean, there's Nike. This will be, at some point, this is going to be a massive buying opportunity. And think about it this way. You could even, let's say you're a traditional investor and you just say, I'm going to dollar cost average Nike, and I'll buy 100 shares today, and I'll buy 100 shares in 3 months, and I'll buy another 100 shares in another 3 months. Maybe that'll work out. But I think the drawdown in between to get from where you are, say, today down to these lower levels, which are appearing, they're popping out pretty aggressively. Where Nike, forget 87, I would think 65 or $60 is probably the place to look. Still lower until that happens. It's a difficult time. I mean, it's just really challenging. Let's go over quickly. I do need to get out today, just shy of 1 o'clock. Crude oil. And maybe the best thing for all of this would be for crude oil to come down now and drop and kind of flush out even the fear of inflation. If you could get crude oil to come down under the 70 mark, under 75, that would be a huge help. You are about to trigger something interesting today. Let's see how low. It was flashing out of the zone on HSI on the daily. You have a bearish harmonic strength index signal that you will get an arrow probably by the close today that'll look like that. And you are out of your amplified RSI. So you've done the inflection. Bang, you're up, you're out. What that tells me is this is a reaction. Okay, it's like a straight up quick move, 12 session move, now rolling over, do a 3-bar, some kind of 3-bar reversal or whatever under 88. This thing should start to get going. And again, rolling back down. I talked about this yesterday of why I thought lower levels were likely. Lower levels structurally to get hit. Even if we check back last week, which is a possibility. And don't be surprised if that happens, if the market takes a plunge here in the next week or 2 weeks, that we come back and retest the lows at just under $81. Keep an eye on it. I just, where the market is currently, trying to finish a number of retest patterns. A lot are failing, though. That's the problem. A lot are failing. Here, 1 or 2 more. Okay, here's Mosaic on the daily. This has been a beautiful return opportunity where, let's go to the other chart. Sorry, let's go to this chart. There you go. And Mosaic and CF and a couple of those other ones are great ideas, I think, for this economy. But what's the price? Mosaic, here you go. We were in that in a type 1, and here you go. Back, just play it for the 886 retest at 45 until you're down there. Okay, there's type 1 up to target 1, got HSI, and then back down to 45. That would be a beautiful opportunity, but I'm still waiting on it. A whole bunch of things have to happen, but nothing changes in that return opportunity. Couple comments. What's happening in the chat? What's going on? You guys have a few ideas. You want to look at nat gas? Sure. Let's look at UNG. Any thoughts on the CPI? I'll look at the CPI chart in a minute, Lalo. I think that is probably a good one structurally. We looked at that a while back and projected like 9%. Yeah, let's go. Here's UNG. So UNG and the whole nat gas story remains $6 support, $10 or $9 resistance. And we're getting some bullish patterns on this retest, which is something I said, hey, if we get that, it'll be another opportunity. around 30 and change, 32. We were up here, and I was saying, I put this out as an idea for Harmonic Trader premium members, gold, silver members, that was a short opportunity on UNG. And now we're coming back down. We're almost at target two. Beautiful. Basically $18 is target two. So we could trade not just 20 to hit the bat, but maybe even a little bit deeper before the larger situation triggers. Where's HSI? Not there yet. Again, notice how, where's HSI? It's trending lower into the zone. That's an event that has to happen in combination with the zone. And so you're not, look, you could fear that you're going to miss out, or you could be patient and wait for your strategies to come to completion. That's what we're doing. And that's under 20, I think. And looking for this to just stay within, basically from 18 to 30 is your range. Here's the Boyle situation. Someone mentioned this on our way out yesterday, but and I thought it was a beautiful chart. I was saying under 49, maybe 48. Keep an eye on this one. This Boyle might retest the terminal bar as low as 46. Okay, 48's the number, 48.31. We actually kissed that this morning, and we're trying to stabilize. So again, like a lot of these, I want to see a bullish candle in here. You're retesting the zone. Give me a bullish candle somewhere. Because if we get out of this zone, remember, Boyle has been extremely aggressive. This is that ultra natural gas pro shares trust that you have to set your targets almost automatically. It's a type 1 move. I would look at 75 and not be surprised to see if this comes back down one more time. That would be the type 1, type 2 scenario for nat gas. And this has been so volatile, it wouldn't surprise me if that goes down like that. Costa's asking, how many bars past a high would be a cutoff for the 3-bar reversal? Well, look, utilize that. What's the 3-bar reversal? We're looking for individual price action to give us congruent behavior with the pattern. So here's an example. There's the first test of this crab pattern. Let's go back. You're asking about a bearish situation. All right. I probably should get like a NASDAQ pattern, but let's just stay on Boyle. What we're looking for, and I don't have HSI on this. What I want is confirmation, but let's just look at the 3-bar reversal with it as well. We want the completion of the pattern. We want confirmation, and then we want to be in the zone where we're at least taking out a 3-bar range. And you know what? Thursday I've got some illustrations I can pull up on that. I know here it is. Here's the one that will clearly explain it. NASDAQ daily. And this one has, just in the last several weeks, has had many 3-bar reversals. Let me bring this out. Ideally, we want to look for them in the zone. Okay, in a pattern range with confirmation. There you go. I need one with confirmation. Yeah, okay, this isn't great, but look, this explains it. What we're looking for that 3-bar turnaround in a specific spot. We want a pattern completion. We want confirmation. For the NASDAQ way back in June, it was here. Why? Because that was your first confirmation. Pattern completed back in May. Now tell me, where is there a 3-bar breakout within a zone? Because usually what happens is that will bunch up and break out of that zone and at least kind of break out of that congestion pocket. So if we're down here, there's your confirmation. Where's the first close above a 3 bar? It's like there. Maybe you could maybe say there on the prior bar. Need a better example, but it's kind of a way to kickstart a move. If we see it clearly, check out, this isn't necessarily in an ideal zone, but let's just, I mentioned this before, look at the last 3 bar reversals. Here's the peak, 1, 2, 3, your close cleans out the last 3 bars and then leads to a continuation. And then we had that large breakdown, again, 3 bar range, taken out, closed down. And yet another. I mean, this is, and it seems like while that's such a big candle, maybe most of the selling is out. And no, it just continues as just a trend continuation signal. And even have, you know, you have to have follow through. I mean, even on the bullish side, just a couple days ago, we had an attempt at a bullish turnaround. Okay, because look, 1, 2, 3, you just closed above that, but no follow through. It has to follow through. If you're going to get a 3 bar, you have to see that follow through shortly thereafter. Nothing. Really quick, well, let's jump to crypto. We haven't even gotten into crypto. I mean, come on. Let's look at the total indices. A lot going on there. Here's total with everything. Under 880 billion, it's over. So we continue to scrape. This is all due to Bitcoin. Bitcoin is now starting to take on the Bitcoin chart. Nothing there yet. And 1 second. Thank you. I'm just watching for one candle close below these lows. Should set that into a flush. Nothing to do though. You probably, even if this is going to go sideways, let's say Bitcoin's going to park itself at 19,000. It's still going to take until November till you crack this downtrend and you get some positive price action to the right of this bar. So you're, again, maybe the last week of October, you're finally going to clear the time slope of that downtrend. Maybe set up for November something, but you're really riding an edge. Go to total 3, take out Ethereum and Bitcoin, and that looks worse. And that's what we mentioned yesterday. Really nothing here that would even suggest this is going to go back and return. And this is another situation where if these just kind of click lower and click lower, I'm going to say you're going to test a deeper hop level on total crypt, and that's 30% lower, 250 billion. Really possible. It just does this. It's done a dud. It's been a dud all summer long. And what's the only level left off of that crab pattern for total 3 is hop down here. Same deal with the downtrend. Look, there's your downtrend. Let's get this peak. Let's get that secondary peak and then time that out. Where can we really break that? If we stay at the current level, 360 billion, you won't clear that. You won't, let's just say it goes sideways, does nothing but goes sideways. It's still until December that breaks out. All right. So all of that tells you this is going to be more about an end of a year event. It's not going to resolve itself in October. It's not going to resolve itself after the election. I think it's all going to resolve itself after the end of the year. Couple more. What's happening? What's going on? Laser D's in the house. Evan saying, yeah, it would be cool if we closed above the pre-COVID 29.6 high on the Dow. I think that's another one. Can the Dow recover? You're looking for signs. That's what I'm doing. I'm looking for signs. I don't want to say grabbing at straws, but I've been sitting on the sides with a whole lot of money. I have not gone back in. been in what's I showed you I'm in Philip Morris. That's one of a few sizable positions I have left, and literally sitting probably 80% cash, wanting to go back in on this massive correction, but it's not there yet. I'm chomping at the bit, quite frankly, from a larger scale. I know I've been here before. Every time the market's down 30%, you're getting close to a major corrective low. But as you get to that low and try to round out that low, it gets nasty. That's where we are. We're in a real down phase, nasty phase. Look at the SPY real quick. And this all affects Bitcoin and Ethereum. And I think a lot of people are learning how for the first time, because everyone guessed crypto would not correlate. It would be a safe haven of some sort, where if the tech or the stock market gets turns sour, you could hide out in crypto. Well, that's been proven to be false. It's all related to liquidity, money, low rates. SPY here, retesting your last ditch level, 358 is it. And you were under it for a minute this morning. You were 357. Any close under 358 for this, then you just, again, you step out of the way. And here's the SPY. Let's connect dots. Because does this become the second leg? Lower? The SPY, the S&P 500, that's the big index that you take out this B point. And that's at a 40%. It's still a valid BAM, but this becomes a greater bat action magnet move, because your 886 for the COVID low is 240. It's a lot lower, and I know these seem like huge numbers. I know that no one's talking about these kind of numbers, but it's not. What it's going to be, I think, is that when we get there, people are going to be like, oh, yeah, well, of course we're going to retrace the COVID thing because that was all fluff. They won't start saying that until it happens. But from the harmonic pattern perspective, we connect the dots. We know this is a larger structure in development. We've already violated your B point. That's why I've been talking about the BAM, bat action magnet move, so much. That once that triggers, okay, it sets in motion that accelerated leg to come down for the secondary for this 886 test. We see it time and time again. You're one bad week, one more bad weekly candle, a candle close, like I said, under 358. Doesn't even need to be a huge candle. That will set it off, and it's something that goes into next year. Where is liquidity right now? Rocky Free is asking. It's a great question. It's mostly just going into the money market. The dollars that are getting taken out are going into the dollar index. So that's why, and take a look at dollar index, because even that and interest rates, all of these, they're not going to stop until you get one bearish candle on the week or on the month. That's how long it's been in effect. Here's your dollar index weekly chart. All right, we had a weekly bearish candle 2 weeks ago, followed up with a bullish candle. Where's HSI? HSI almost there. Looks like HSI is trying to register. Amplified, got a complex structure, so that could be reactive if it comes out of the zone. But that's where it is. People are just, I don't think people are hiding anywhere. If they're trying to, they're not doing successfully. I think you look at what's happened with energy, you would think people would be hiding out there. No, that's breaking down. I just think you've got massive cash building up where you want capitulation. Let's look at the VIX. We need a 40 VIX, minimum 40 VIX. There you go. 32 is not going to cut it, folks. You're not going to get any kind of major market event until the VIX can spike. You're hitting, actually, on the daily. Look, VIX is hitting a spot where You're checking back of a bearish HSI at around 34, 33. Could be a pause there. It's not spiking. That's not what you want to see. And again, we've talked about the 2008, 2020, 2002. This is what they look like. So really think about it this way. We are the fourth worst decline in the last 50 years right now. When will it end? That's our job. We're trying to figure out when this thing will end. Is there a long opportunity on this decline yet? Not really. And then what are the historic precedents that mark the peak? You know, there's the 2002. Sorry, there's the 98 crisis, 2002, 2008. Here's the bottoms. A couple of in between. Even these during the Obama years there were 40 plus, and those were no financial crises. And then COVID, well above 80. So you tell me that at a minimum to end the crisis, okay, you need to reach that you need to reach that middle band, and you're already, like I'm saying, 25% down, headed for 30. You need to have this happen on the VIX as well. It's not there yet. That's you wish it was there. You wish you had more fear, but no. Go here on there's the 4-hour chart, nothing. Keep an eye on that one. I mean, it's not, if this drags out, which is I think what the VIX is telling us, that this current decline there's not going to be a finality to it, not now. Here's S&P futures on the daily. I thought this was a good chart to look at. Take a look on, we're retesting here. A whole bunch of, there's a lot of crazy patterns. Okay, you've retested this deep crab pattern. Let me clean it up. And let me get out this. There you go. This should help it. All right, it is deep crab. There's the type 1 opportunity. Now, you had confirmation, but no perfect check back. That's a real bugger. That can happen because look, it came back almost to the bottom, to the low at 36.63. It got to what? 36.90. But this is also a good example of where 3-bar reversal can help you, because let's say you're waiting for that perfect check back and it doesn't happen. Well, by the time you break out of, say, 1, 2, 3 right there, you're really starting to respect the fact that this will likely go to a target 1. Where you are here, okay, now you have confirmation, no check back, but I'll be looking. Would have to hold this level, and this is it for the whole market. You go under this hop level at 35.46, it's over, because the pattern fails, confirmation fails. You're still 3 more days away before that would even give you, in the best of situations, some kind of 3-bar turnaround. But that's what it'd have to do. You're scraping the structural low right now, and you know you're not. It's not too impressive in terms of what HSI has done so far off of that reversal. And you did have a double test of RSI, so you're oversold on daily charts here, no doubt. I mean, you're washed out. But if this is going to be strong, you have to see this thing absolutely stabilize now and then begin to build off that low. If it fails, under 35.46 for the S&P, like a lot of those other markets we've been talking about, triggers the bigger scenario. And here's the weekly. I know this was another one where I mentioned this yesterday. The pattern's getting generated. This pattern. Come on, where'd you go? Oh, where'd you go? Hold on. One second. Oh, yeah, good. Okay. Here it is. It's either daily or weekly. like the NASDAQ. It's, there you go. There you go. Crab pattern. That's what that gray structure is. Under these lows. 3,300 minimum, 3,350. And it just, you're getting to where it's creating these crab structures lower and lower. So be mindful of that. Where I said this yesterday, that the software just in the last week or so, or 10 days, started to spit out these larger potential structures that all are lower. Last one is, let me just do Dow. Dow, I said it was a couple of back-to-backs. Check it out. We are sitting right here at the butterfly, and that's at, nominally retesting basically 29,000. That's it. So you're at the bottom, structural bottom, scraping it. There's the deep crab we talked about from June. That set off your June reaction from basically 30 to 33, 34,000, and then it's been a straight tank of 5,000 into the October low. What's great about this, and scary but great, is that I think it's real clear. Wouldn't take more than a couple of bars under that 28.3 level to set this into a much steeper retracement. And I mentioned this, that the industrials have not gone. It's not in the same situation. They're the last to fall. This kind of reminds me of the 2002 market, where techs really got crushed first, and then eventually the Dow and the S&P, they fell after everyone started throwing everything away. And for this, it's, I said 50% level of COVID rally, 27.4, 886. That's your extreme, super extreme bad action magnet move, 20,000. And I will stick to that, where there's no alternative underneath these lows. It's either a big secondary target, or you hold these lows now. And it's not, your indicators, the markets in general have at least 3 days of work. I mean, we'll come back here Thursday and still be saying, okay, this is going to need another 2 more days, 3 more days. I just don't think it's really done anything on an individual day. Tomorrow is the big announcement. You're going to see what that response is here. But the risk reward to get long anything at the moment, no. Next week, that might be a different story if it flushed out or triggered. I think if you do the failure like tomorrow, and then we come back in here Thursday and we're below these levels, that we'll have to talk about what we're going to do with the rest of the year and into January, because then we're going to have to strategize for the bigger drop, and the second leg will be, I think, pretty nasty under these lows, but they're all well defined by patterns. That's what I have for today, folks. I do have to roll quickly, get out of here, but we'll be back on Thursday. We'll give away some books. First one in, type V3, you will win. And again, for the new folks that are coming here, a lot of people are telling their friends. That's great. We've had a bunch of trading groups join us recently, so shout out to those people. Get with Harmonic Pattern Basic Membership. Please share that with your friends and tell them about getting on the free trials for the software. Until then, until Thursday, I'll be back at 12 noon. We'll see you. Have a great one as always. Go get them. Hang in there and take care.